Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Sunday here in Honolulu, Hawaii, Monday in Australia, the start of a trading week, and this is the daily report for July 25th. Forex Gold is trading quietly unchanged, down 50 cents currently. We have a low of 1187.50 and a high of 1191.80. As you can see, very quiet activity. It is continuing with this candle here, and we will see how it develops as we go into the trading week, of course, in Asia, London, and then New York. So traders, here's what I'm looking at right now. As you know from Friday's report, we're looking to see if this A wave has actually ended. As you can see, we have had a series of higher lows as well as a series of higher highs. Also, in terms of our straight Fibonacci retracement, and I am drawing this long Fibonacci retracement from our beginning of wave 1 to the top of wave 5, and this right in here is our 38% retracement level. So it's a logical level for us to look for in terms of retracement. However, at the same time, you notice when the market traded lower here and we had a 23% fib level right in here, it did trade in this area and then it broke to another level. Although we have not received confirmation on a candlestick pattern, and if you recall, we had two attempts at that. This first engulfing bullish that we got, which was actually the low right now of the market, we didn't get our confirmation on the following day. And then that engulfing bullish that we had on Thursday. On Friday, we didn't receive confirmation. But what I am looking at right now is going to be some other Western technical indicators to see if we can get some sort of a confirmation of that. Now, in terms of our stochastics, we have not crossed this red line being our percent K, and we'd want to see this percent K, of course, kind of cross up there with the D going below it and then crossing up. We would look for that. We haven't got that. We do want to look at a couple other indicators also. So when we look at our Bollinger Bands, what I'm finding interesting there is that when we did get to this bottom of the Bollinger Band, the market has moved off there. Remember, on a Bollinger Band, you're looking to buy when it hits below these bands here, the bottom band, and you're looking to sell at these top bands here. And as you can see, that's been pretty effective throughout if you go back and forth throughout this last wave. And also, when we look at our moving average convergent divergence, which is the MACD, you notice that they are starting to move closer together. You did have a widening right in here as this market came down. They did start coming together. They then began to widen. But right now, what we're witnessing is these two bands starting to come together. And again, you would look for the same thing. You would look for them to converge and then for this shorter term to cross over the longer term MACD. So traders, what I'm really looking at this point is obviously I've blown the chart up and given us a little bit of room for projection. Our fourth wave, final corrective wave, final impulse wave, and the impulse stage itself for phase 5. We are currently in wave A. The question remains as follows. We had this first band here. When we had the band, it stayed steady, but then it dropped below, and then we created this new band here. In both occasions, though, you notice that it kind of came off and started to trail and move up, and then it broke and then sold off. In the same way here, if we look at our trend line, we are getting the same kind of a thing. We're getting the succession of higher highs and higher lows. The question is it going to be able to remain breakthrough, and will we see follow through and that end of the A wave and go into our impulse or B wave here? So what I would be looking for is if in fact, and it's a big if, we've got to see how it reacts here. We've not gotten any candlestick patterns that confirmed. The Bollinger Band is giving us a buy signal, but both the MACD as well as our stochastics have not crossed, haven't given us that solid indication. Once we get that and a candlestick pattern, I think it's going to be safe to believe that we've gone into our first impulse, or the B wave, and as I said, I'm looking for that wave to take us roughly to the 1221 area, and that would indicate to us a pretty solid buy opportunity here. Then again, if we get kind of a stalling action, I would look for an engulfing bearish. I would look for a dark cloud cover, a star such as here, but different types of bearish reversal indicators that would take us back short, so that we could maintain a short position through that C wave, because the C wave has got the greatest potential in terms of where it could go to the downside. It is typically going to be 1 times the amount of our A wave, up to 2.62 times the amount of the C wave. So there is absolutely opportunity on the downside on that particular wave. I think that we are absolutely in a corrective phase right now. I also believe that we have correctly looked at this as our A wave. It's a matter of where the B wave is going to begin. The A wave is always the most tricky. The A and wave 1 are always the trickiest waves to kind of discern, because we're taking an absolute flip into what we're looking at as the overall direction of the market. In other words, when we hit our wave 1, and let's take a look at that. When we hit our wave 1, which is this is our first wave, realize that we were just coming off of a pretty solid correction here at 1221. It makes it slow. It comes back up to around 1175 and then comes down here to 1040. At this point, you're still looking at the market as being bearish, because it's had this succession where it's had a lower low, a lower high, and then yet another lower low. So it's very, very tricky then to pick this as a bottom and say, okay, the market's going to begin to move up from here. In the same way, when you hit your A wave here, the market's been coming off of 5 solid waves to the upside, and that's why it gets a little tricky to be able to discern or pick this as your absolute top in the market. As I said, I think that now we can solidly say that we're in our A wave. We've gone through our entire impulse phase here, and it's simply a matter of positioning ourselves, I believe, to the long side when we get a proper indication or signal. I don't want to get in too early. Buying on the B wave is a tricky endeavor, because we are buying into a period or cycle where the absolute trend is to the downside, and I really think that that C wave, and this is that C wave from the last move, is going to give us some really good opportunities to get short. I'm a long-term bull though, and so that all I'm trying to do is weather through this corrective phase so we can begin to position ourselves from the long side, where I feel much more comfortable, because fundamentally I think that this market is going to head higher over the next 12 months. We'll have to see what this week brings. It's going to be an interesting week, I hope, in Forex Gold. We will talk to you tomorrow on Monday, and traders, as always, wishing you good trading. Bye-bye.